Hello everyone and welcome to Day Trader S&P 500. Today is Wednesday, May 24th, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. Want to get our YouTube subscribers caught up with all the action, a lot going on. We put out 3 reports today to our monthly subscribers, so let's get our YouTube subscribers caught up. I want to touch on the Qs. We haven't looked at those in a while. Okay, let me do this to make it a bigger picture here. Okay, as you know, or maybe you don't know, I don't know, the Qs moved above the August 16th high right here. They're the only index. The NASDAQ futures did also, but not the NASDAQ cash. Okay, so here is our wave count on that. We've got a 1 down, a 2 up, a 3 down, a 4 up, and a 5. You can see the third wave subdivided into 5 waves, and that was the wave 1 low on October 13th. We got an ABC up for a wave W, an X, and an ABC wave up for Y. Y could go a little bit higher to the 349 is 349.66 is the Fibonacci 0.618. NASDAQ leads on the way up and leads on the way down. It's entirely possible for the NASDAQ or the Qs to break above the August highs and the other indexes like the Dow and the S&P not to follow, because in bear markets in the past, we saw it in 2000 where markets, I think it was the NASDAQ topped in March and the Dow topped in January. I think it was January 7th. Same thing happened in 08. So there is divergences in bear markets, so that's entirely possible, but that's what we're looking at there. All right, that would be wave 1, and let me put this up there. It could still go higher, but that would be, excuse me, wave 2. If I could type, that would be good. And there is the 2, and we'll put it there. Okay, so that's what we're looking at there. Obviously, that could still go higher. Let's look at the US 10-year. I believe I have that in here. It's a little more crowded, but that's the 5 waves up from the year 2020 low. Okay, it went from less than 1%, I think it was 0.667 or 0.333, up to 4%. A big rise in a short time. We have an A wave down, a B wave up, and there's a C wave down. There is where C equals A at 3.075, and the 382 retracement down here at 2.810. Let me change that a little bit to get that up there. That was for a different format. There we go. Okay, is at 2.810. But the key thing is here is from this low at 3.253, it looks like we got a 1 up and a 2 down, and I want to look at that on an hourly basis to get a little better perspective on it. Okay, bear with me here while I extrapolate that out and move these things over for that degree of, or that hourly. Okay, we have from that low here, and maybe that was there, that maybe was right. Okay, we have a 1 up and a 2 down, which is not labeled, but we needed to see a move above this, and we got it. Okay, so let's put that, there it is labeled. Okay, that's the same number, I just had it moved over there. Okay, so from that low there, we've got 5 waves up for 1 and a 3 wave correction, A down, B up, C down for wave 2, and then we've got another 5 wave pattern to the upside. So it's safe to say that this correction here didn't go to one of these red numbers here where C equals A or the 382. It went to here, the 3.253, okay, back here. So we've got a 1 up, a 2 down, and this is where 3 equals 1. It went above there so far. There is the 1.272 at 3.794. We got a 3.850 and a 3.929. And I think if we look at, that was the trigger there to those targets there, okay? There we go. Does that make sense? It was not activated. Instead, we got a higher high. Okay, and that looks like wave 3. Okay, so let me get back to the bigger picture because I believe I have that higher target. There it is. Okay, let's again extrapolate that to where it's more legible. Move that back over. There we go. So we got an A down, a B up, and a C down. We've got a 1 and a 2 and a 3 that is confirmed because it's above the wave 1 high and it's got higher targets here. We get above this 4.089 and a minimum target is where 3 equals 1. There's 1 right there at the 4.335. There's 2 at the 3.253. 3 equals 1, which is the minimum extension at 7.286%, and 1.618 would obviously be higher. So here we go. The trigger is a 4.089. A move above the B wave high indicates a move above the wave 1 high at 4.335 and ultimately at least to 7.286 and possibly higher. That's the minimum target. Long way to go. This took over 2 years to develop wave 1. Then we had 2, so then we'll have 3. So that is the US 10-year. I want to get you guys caught up. Let me get back to, let's go back to the 23rd, okay? Today's the 24th. This is market close. You can see here, by the way, I'll be out first couple days, or the last couple days of May. There's a holiday on Monday and Sunday, so we'll only miss 2 days at the most. But this is what we put out yesterday. Excuse me again. We had a 1 down from the 519 high, a 1 down and a 2 up. We were looking for a wave 3 and it gained equality. So what we said we needed to see yesterday, we needed to see any moves higher, which would be wave 4, hold below the wave 1 low, followed by 5 more waves down to below the wave 3 low. This will give us a completed 5-wave pattern to the downside at the smallest degree of trend. I believe we put out, yeah, the 1-minute bar there. So let me get to the ES, and I believe there. Okay, we'll go back. If you recall, I think we covered this in the last YouTube video. This was definitely 3 waves down from the 5.1 high to the 5.4 low. So we knew we'd see we needed to see 5 waves up to complete the pattern. I could go back. I wonder if I have it. Bear with me while I scroll back here, because we were going way back into February. We're in March. I think it was on a 10-minute. Maybe it wasn't. There's February. All those direct hits. I was looking for the lower lows and lower highs. Let me get back. Bear with me while I scroll through. I keep all this stuff, not for sentimental reasons, but for mathematical reasons. Let me look at the hourly. I may have it back there, because we were in the same situation. There it was there. Okay. We kept seeing 5 waves up to a higher high, followed by 3 waves down. And we're saying back here in January and February, the downward waves are 3. That's corrective. This market is going to keep making higher highs until we see 5 waves down. 5 waves up, higher high, 3 waves down. 5 waves up, higher high, 3 waves down. 5, again, rinse, repeat, okay? Finally, after the February 2nd high over here, we got 5 waves down, and that was it. That enabled us to catch these moves down, which, as you'll recall, had ridiculous retracement levels, 786s and 900 that were holding and producing lower lows. There were 11 such animals with 9 direct hits. Anyway, wanted to show that to get back to what we're dealing with now right here. Okay, so we had 5 waves down. We needed to see 5 waves up, which we got. Okay, there was that. And then, which the report yesterday said, we need to see 5 waves down. If you see 5 waves in one direction, immediately following 5 waves in the other direction, that's a change in trend. Okay, 5 up should be followed by 3 down, 5 more up. Same on the reverse side. So we needed to see this develop, and as you can see, it did. Let me take you back to the report, and that's what we needed to see. We need to see that 4 hold above the wave 1 low, and then 5 more waves down to a new low, which we got, which we'll get to the pre-market open today. Okay, and there we go. That's the same one. Okay, and there's our targets there. So let me get to the other one we had today. Get you guys caught up. Midday report. I think that's where we got confirmation. Yeah, there we go. There's the 4 up, holding below the wave 1 low. Okay, let me get that in there. And then 5 more waves down. And we had a target, Fibonacci targets here, and I think we had a 41.15, ended up hitting 41.14 within a point of our target. That when we wrote this, it was 41.17. But again, we put another report out with another direct hit. Let me get that post-market close, and then we'll get more into the analysis here. Okay, and there is the 524 post-market close, and there you can see there's a lot in this here, but there is that trend reversal of 1 down, 2 up, 3 down, 4 up, 5 down. There's the retracements that we got today. 41.57 was the actual high. It's within a quarter point of a direct hit on the 382. Like I always tell our subscribers, it's not required, but we got to allow for a move higher in retracement. But fortunately, we have triggers and targets. A move above 41.57 means we're hitting one of these targets. Okay, if this thing goes down, it means that retracement is over, and if it goes below this 41.14 low, then we're getting these targets. Okay, and that's a 1, that's a 2, that's wave 3 targets, and I'll get into that analysis there. There's where that direct hit was within 1 point of our Fibonacci 1.272, and you can see there's that again, and you can see our upside trigger is the 41.57, which is here. A move above there brings these targets into play, and the verbiage down here, the downside trigger 41.14, that's today's low, and it brings these targets into play. So that's what our subscribers get in advance. Okay, and like I said, I try to get you guys caught up. But let me get into the analysis here. So that's the hourly, and that shows you all that stuff there. There's the 1 down, 2 up, 3 down, 4 up, and 5 down. You can see that's right on the 272. This thing could still extend further and hit one of those other targets down there. And this here, these longer red lines are the Fibonacci retracements of that 5-wave advance. Okay, we had the 3 waves down, we had 5 up, and this looks like 5 down to me. Okay, so that could be 1, that'd be 2, and then we get our wave 3 targets, which you saw on the other charts or pictures. I'm sorry. There's our larger downside trigger over there. Okay, we had upside triggers that were activated, which allowed us to see those highs. Let's get a little closer on the 10-minute. Here we go here. Okay, that is the same thing. I want to zoom in on this action here from that 519 high. I think that might be a little better there. And there we go. There's the 1 down, 2 up, 3 down, which was a 1.618 multiple of 1, 4 up, 5 down for the larger degree wave 1. Again, we have to allow for 2 to go all the way up. You know, it cannot retrace more than 100% of wave 1, which is 42.27. Again, our key resistance on a bigger picture is the 43.27. Remember, that's the August 16th. I may be able to show you guys that. Let me see. Yeah, there it is right there. Get rid of, anyway, that's the one that the Q's crossed, but they're the only ones that did that in the NASDAQ futures. Okay, so here's the 5 waves down, and there were those retracement targets. I think I got that on a 10-minute. That's where we were. So that's where we are. We have our trigger, upside trigger, and targets. They're here. We have our downside trigger. There's our targets there. And let me get to the post-market close. That's it with a little better picture there. Okay. So the market's going to tell us what it is going to do. 41.57 was the actual high. It was within a quarter point of a direct hit of a 382 retracement. Wave 3 down is on deck. We'll see if 2 up goes higher first, or if this thing just decides to collapse in wave 3 without getting a higher retracement target. We'll know soon. Okay, thank you guys for watching, and until next time, take care, everyone. Oh, wait. One more thing. My apologies. Discord channel. We haven't got it activated yet, but for you guys, I'm planning on going there. I'll get around to it sooner or later, but maybe in the month of June. May's almost over. Okay, leave you guys with this again, and until next time, take care, everyone.